Hey there, I'm Bev from bookkeepingcoach.net. With over 30 years in bookkeeping and finance, I've seen it all and fixed it all. Whether you're a new bookkeeper or a business owner handling your own books, I know how overwhelming it can get when there's no one to turn to with questions. That's exactly why I created this channel. No more messy books, no more sleepless nights. Just clear, practical advice from someone who's been in the trenches. So hit the subscribe button and let's transform those financial headaches into financial clarity, one entry at a time. Bookkeepingcoach.net. Your questions answered, your business empowered. Welcome back to our QuickBooks Online tutorial series. Today, we're focusing on proper customer and vendor management, which is absolutely crucial for healthy cash flow. How you set up and manage these relationships directly impacts your payment collection and expense management. Did you know that proper customer setup can actually accelerate payment collection by up to 30%? Today, I'll also share vendor management techniques that prevent costly duplicate payments. You'll also discover how custom fields and groups can transform your business intelligence and your reporting. Setting up detailed profiles. Let's start with the essential information every customer record should contain. Begin with a unique customer display name using a consistent format, either last name, first name for individuals, or the full business name for companies. Include a complete billing address, which affects tax calculations and payment processing. Always capture email addresses for invoicing and phone numbers for follow-ups. For product-based businesses, add shipping addresses as well. Document payment methods, whether it's check, ACH, or credit card, and set correct tax settings based on their location and exemption status. Incomplete profiles are the #1 cause of payment delays, so be thorough from the start. For vendor profiles, capture the legal business name, not just a contact name. This is essential for 1099 reporting. Include tax ID numbers for 1099 vendors and complete mailing addresses for payments. Add primary contact information with direct phone and email. Document the preferred payment methods and any specific instructions. Note payment processing windows, if applicable, and set correct default payment terms. These details prevent return payments and strained vendor relationships, which can impact your supply chain. Custom fields allow you to capture industry-specific information. Service businesses might track service territory, referring sources, or contract renewal dates. Retailers might note a preferred shipping method or seasonal buying patterns. Contractors could document license requirements or specific equipment needs. Access custom fields via the gear icon, custom form styles, customize, custom fields tab. QuickBooks Online Plus and Advanced allow up to 12 custom fields. Make fields required for critical information to ensure consistency. This transforms basic lists into powerful business intelligence tools. Profile settings significantly affect transaction behavior. For customers, the preferred delivery method, email versus print, determines how invoices are sent. Payment terms automatically calculate due dates. Preferred payment methods affect processing options. For vendors, terms drive due date calculations. Tax ID determines 1099 eligibility. Account settings can pre-fill expense accounts during transaction entry. Configure these correctly during setup to improve cash flow projections and accounts receivable payable efficiencies. Organizing with custom fields and groups. Creating meaningful customer and vendor categories enhances your reporting. For customers, consider categories like industry, size, geographic region, or acquisition channel. For vendors, you might use categories like product suppliers, service providers, contractors, or utilities. Implement these categories using customer vendor types, custom fields, or tags. Create them via the gear icon, lists, customer types, or vendor types. Aim for 5 to 10 primary categories aligned with your business decisions. Strategic categories transform standard reports into strategic insights that drive better decision-making. Custom fields are perfect for targeted reporting. Create them via the gear icon, Custom Form Styles, Customize, Custom Fields tab. For example, a marketing source field can track how customers found your business, while a customer size field with values like small, medium, and enterprise helps segment your customer base. You can filter or group reports by these fields for analysis, and this allows you to analyze which marketing channels bring in your largest customers or determine which customer segments generate the most revenue. These insights help make data-driven decisions about marketing and customer focus. Tags offer even more flexibility than custom fields because they're applied during transaction entry and can track across multiple different categories simultaneously. Create tag groups for different analysis perspectives, regions, departments, projects, and specific tags within each group. Apply multiple tags from different groups to transactions for multi-dimensional analysis. For example, you could analyze marketing expenses by region or sales by both department and project. This provides insights that simple categories simply can't deliver. Group reporting techniques transform basic reports into business insights. Access this via the Reports menu, select Report, Customize, Group by, and select customer types, custom fields, or tags to reorganize standard reports. For example, group sales by customer, industry, and size, or group expenses by vendor, category for spending analysis. Export grouped reports to Excel for even further analysis. These insights inform strategic decisions about customer segments and vendor relationships. Managing credit limits and payment terms. Setting up and enforcing customer credit limits is crucial for managing risk. Set limits in the customer profile under Payment and Billing tab. Determine appropriate limits based on payment history, size, and industry standards. Start conservative with new customers until they establish a solid payment track record. Create a process to enforce these limits. Regularly review your AR aging summary report. Compare outstanding balances against credit limits. Develop standardized communication approaches for when customers approach their limits. And train your staff to check the limits before processing large orders. This reduces bad debt exposure while maintaining positive customer relationships. Establishing clear payment terms and customer profiles ensures consistency. Set default terms for all customers with customization for specific accounts as needed. Access these settings in the customer profile under Payment and Billing. Common terms include net 30, net 15, or due on receipt. For project businesses, consider milestone or percentage-based deposits. Align your payment terms with your cash flow needs. Ideally, you should be collecting from customers before having to pay any vendors for related expenses. Document negotiated terms clearly in profiles and update them promptly when terms change, noting the effective date. Clear, consistent terms speed up collections and improve cash flow predictability. Early payment discounts can improve your cash flow. Configure these in the customer profile under Payment and Billing. A common example is 2% 10 net 30, meaning a 2% discount is applied if paid within 10 days, with the full amount due in 30 days. QuickBooks automatically calculates the discount amount and due dates. Create a specific early payment discounts income account as a contra revenue account. QuickBooks will prompt you to apply the discount and post to this account when receiving an early payment. Run reports on this account to evaluate program effectiveness. This approach is often less expensive than short-term financing options for businesses with tight cash flow. Automating customer statements and payment reminders saves time and improves collections. Generate statements through the Sales menu, All Sales Statement button. Filter by criteria like overdue status, schedule monthly statement runs after month-end closing. Configure automated reminders through the gear icon, Account, and Settings Sales tab. Set different schedules based on how far past due an invoice is, perhaps 3 days, 15 days, and 30 days. Customize reminder language to match your company's tone. This ensures consistent follow-up without manual tracking and significantly reduces average collection time. Vendor payment terms and default accounts. Vendor payment terms should optimize your cash flow. Review terms in the vendor profile under Payment Settings tab. Negotiate terms that align with your cash cycle. For example, if you're collecting from customers in 30 days, aim for vendor terms of 45 days or longer. Evaluate early payment discounts based on your cash position. A 2% discount for paying 20 days early equals a 36.5% annualized return, often better than many investments. Record the full bill amount and use the Pay Bills function to apply discounts properly. Batch vendor payments to maintain consistent cash flow. Effective term management can unlock thousands in working capital for you. Setting default expense accounts for each vendor reduces errors. Assign the most commonly used expense account in the vendor profile under Account Settings. For vendors with predictable single-category expenses like rent or internet, this ensures consistent coding. For vendors with expenses across multiple categories, assign the most common one as the default, and then split transactions during entry as needed. Assign these defaults during the initial setup and review it periodically as relationships evolve. This prevents inconsistent coding when different team members enter transactions, and it ensures report consistency and accurate budget comparison. Managing early payment discounts with vendors requires careful tracking. Record the full bill amount when entering a vendor bill. Include the discount terms in the terms field, such as 2%, 10, net 30, and always use the Pay Bills feature rather than creating checks directly, as this properly applies the discounts. Creating a specific purchase discounts expense account as a contra expense. Run reports periodically to quantify your savings, and consider these discounts in your cash flow planning and prioritization. Remember that a 2% discount for paying 20 days early represents a 36.5% annualized return. But don't deplete your cash reserves just to capture discounts if doing so compromises other obligations. Preventing duplicate vendor profiles and payments saves money. Establish a consistent naming convention using legal names, not abbreviations, or contact names. Before creating new vendors, use the global search to check for existing records, and periodically review your vendor list for duplicates by exporting to Excel and sorting by name, address, or tax ID. Always use the Pay Bills function rather than creating checks directly. Establish a verification process to review vendor bills against existing unpaid bills. These practices prevent costly duplicate payments and maintain a clean vendor reporting. Bulk importing and updating. When preparing data for clean customer or vendor imports, download the QuickBooks import template from the Import Data option under the gear icon. Ensure consistent formatting for phone numbers, emails, and postal codes. Use full legal names for businesses rather than abbreviations, and separate address lines properly and remove any special characters or formatting. Create unique display names for each customer or vendor. Scan it and remove duplicate entries before importing. Perform a small test import with 5 to 10 records before committing to a full import. Proper preparation prevents hours of post-import cleanup. For bulk updates to existing customers or vendors, export your current list via the Export to Excel option. Make changes in the spreadsheet while maintaining required fields and formatting. Use Excel features like Find and Replace for consistent updates, conditional formatting to identify any missing information, and data validation rules for consistent entry. This approach works well for updating zip codes, adding consistent prefixes to display names, or changing terms or tax settings across many records. Save as CSV format and use the import data function with the update existing records option. This is especially valuable for updating terms, tax settings, or contact info across many records at once. Watch out for these common import errors. Duplicate detection failures can occur without unique identifiers in both systems. Missing required fields like name, display name, or basic contact info will cause import failures. Inconsistent data formatting in dates and phone numbers creates problems. Special characters should be replaced with standard alternatives. Account references or terms must use exact QuickBooks terminology. If an import fails, don't repeat with the same file. Review the error log, correct the issues, and then retry. After importing, verify your data thoroughly, compare the record count in your original file to the successfully imported count. Sample, check 10 to 15 records against the original data source. Run a customer or vendor contact list report to scan for formatting issues or missing information. And test by creating a transaction for an imported customer or vendor. For systemic issues, decide whether to fix records individually or correct the source data and re-import again. Thorough verification prevents errors during transaction processing. What's your biggest challenge when managing customers or vendors in QuickBooks Online? Have you found any creative uses for the customer or vendor fields to track information? Share experiences in the comments below. I'd love to hear from you. Thanks for watching, and make sure you join me next week for item and product setup best practices.